Hey everyone, it's Green Waifu and welcome back to my channel. Today we're going to dive into a topic that affects millions of people across the United States, the credit card debt crisis and its connection to the recent stock market correction. But before we get into that, I want to share a personal story that really opened my eyes to the importance of financial literacy. When I was 18, I got my first credit card. I was so excited to have that little piece of plastic in my wallet, and I didn't fully understand the responsibility that came with it. I started using it for everything, clothes, dining out, you name it. Before I knew it, I had racked up a significant amount of debt, and the interest rates were eating away at my income. It was a wake-up call for me. I realized that I needed to take control of my finances and learn how to manage my money wisely. That's when I started diving into the world of personal finance, investing, and the stock market. And now, I'm here to share what I've learned with all of you. So, let's talk about the credit card debt crisis in America. Did you know that the average American household carries over $8,000 in credit card debt? It's a staggering number, and it's only getting worse. With interest rates on the rise, many people are finding themselves trapped in a cycle of debt that's hard to break free from. But here's the thing, it doesn't have to be this way. By understanding how credit cards work, being mindful of our spending habits, and making smart financial decisions, we can avoid falling into the debt trap. It's all about taking control and being proactive with our money. When it comes to credit cards, it's essential to understand the impact of interest rates and minimum payments. High interest rates can quickly balloon the amount owed, making it challenging to pay off the debt. By being aware of these rates and making more than the minimum payment each month, we can chip away at the debt and save money on interest in the long run. Furthermore, being mindful of our spending habits is crucial. It's easy to get caught up in the allure of instant gratification, but we have to think long-term. Setting a budget, tracking our expenses, and distinguishing between needs and wants can help us make more informed purchasing decisions and avoid unnecessary debt. Making smart financial decisions also involves being proactive in managing our credit card usage. This means paying bills on time, avoiding unnecessary fees, and not maxing out our credit limits. By maintaining a good credit score, we can access better financial opportunities in the future, such as lower interest rates on loans and credit cards. In addition, exploring alternative payment methods, such as debit cards or cash, for everyday expenses can help curb the reliance on credit cards and prevent unnecessary debt accumulation. It's about finding a balance that aligns with our financial goals and values. Ultimately, taking control of our financial well-being means being proactive, informed, and disciplined. By understanding the impact of credit card debt, being mindful of our spending habits, and making smart financial decisions, we can break free from the debt trap and pave the way for a more secure financial future. Now, let's shift our focus to the recent stock market correction. You may have heard about the ups and downs in the stock market lately. It's been a roller coaster ride for many investors, especially those who are just starting out. But here's the important thing to remember. Market corrections are a natural part of the investing cycle. Instead of panicking, we should see this as an opportunity to learn and grow. It's a chance to reevaluate our investment strategies, diversify our portfolios, and maybe even take advantage of lower stock prices. The key is to stay informed, stay calm, and stay focused on our long-term financial goals. During a market correction, it's crucial to maintain a long-term perspective. While short-term fluctuations can be unsettling, history has shown that the stock market has a tendency to recover and grow over time. By staying focused on our long-term financial goals, we can avoid making impulsive decisions based on short-term market movements. Diversification is another key strategy to consider during a market correction. Spreading investments across different asset classes, industries, and geographic regions can help mitigate risk and reduce the impact of market volatility on our overall portfolio. It's about not putting all our eggs in one basket and creating a resilient investment strategy. Moreover, a market correction can present opportunities to purchase quality stocks at discounted prices. By conducting thorough research and identifying fundamentally strong companies, we can capitalize on the lower stock prices and potentially benefit from future growth. It's a chance to buy low and potentially sell high in the long run. In addition, Staying informed about market trends, economic indicators, and global events is essential during a market correction. By understanding the factors influencing market movements, we can make more informed investment decisions and navigate through the volatility with greater confidence. Lastly, maintaining a calm and disciplined approach to investing is crucial. Emotions can often cloud our judgment during turbulent market conditions, leading to irrational decisions. By sticking to our investment plan, avoiding knee-jerk reactions, and seeking guidance from trusted financial sources, we can navigate through market corrections with resilience and confidence. So what can we do to navigate through these challenges? First and foremost, we need to educate ourselves. Whether it's understanding the basics of credit card interest rates or learning about different investment options, knowledge is power. And that's where I come in. I'm here to be your guide through this journey of financial empowerment. Secondly, we need to be mindful of our spending and saving habits. It's easy to get caught up in the allure of instant gratification, but we have to think long-term. Setting a budget, building an emergency fund, and prioritizing our financial goals are crucial steps in securing our financial future. Lastly, we need to embrace the mindset of continuous improvement. The world of finance is constantly evolving, and we need to adapt with it. Whether it's through reading books, attending workshops, or seeking advice from financial experts, we should always be striving to enhance our financial literacy. In conclusion, the credit card debt crisis and the stock market correction are challenges that we can overcome with the right mindset and knowledge. By taking control of our finances, being proactive in our decision-making, and staying informed, we can build a solid foundation for our financial well-being. I hope this video has inspired you to take charge of your financial future. Remember, it's never too early to start learning about personal finance and investing. Together, we can empower ourselves and create a brighter financial future for the next generation. Thank you for tuning in, and I'll see you in the next video. Stay motivated, stay informed, and stay financially empowered. This is Green Waifu, signing off.